Hello everyone, welcome back to my channel. My name is Anel again, and for today's video, we will discuss problem number 5 and 6. Yes, two problems at a time. Both problems are related to calculating the total assets. Okay, if you're new here in my channel, please consider to subscribe. Click that subscribe button and on or click the notification bell as well for you to be the first to notify if I upload new accounting videos. Okay, so problem number 5 states that ABC Company was incorporated on January 1, 2020 with proceeds from issuance of 10 million in shares capital and borrowed funds of 2 million. During the first year, revenue from sales amounted to 15 million and operating costs and expenses totaled to 7 million. On December 1, 2020, the company declared a 500,000 dividends payable to shareholders on January 20, 2021. The liability increased to 3 million by December 31, 2020. On December 31, what should be reported as total assets? Now we have to discuss what is assets. Assets are resources controlled by the enterprise as a result of past events and from which future economic benefits are expected to flow to the enterprise. Control by the enterprise means the ability of the enterprise to obtain economic benefits and to restrict the access of others. Past events means the events must be passed before the assets can rise. Example, machinery. Machinery will only become assets when there is a right to demand delivery or access to the assets. Future economic benefits, these are evidenced by the prospective receipts of cash. This could be cash itself or accounts receivable or any item which can be sold. Assets could be current or non-current assets. Assets are classified as current if it is expected to realize the assets or intend to sell or consume it in its normal operating cycle. It holds the assets primarily to the purpose of trading. It expects to realize the assets within 12 months after the reporting period, and of course the assets is cash or cash equivalent unless the assets is restricted from being exchanged or used to settle liability for at least months after the reporting period. Example of current assets are cash, cash equivalent, accounts receivable, notes receivable, inventory, supplies, prepaid expenses, etc. As long as it's within the criteria of current assets. Now, what is non-current assets? Non-current assets are all other assets not classified or does not fall under the criteria of current assets. It could be property, plant equipment like land, building, office equipment, furniture and fixtures, delivery equipment, store equipment, service vehicles, etc. Or it could be intangible assets. Example, goodwill, patents, copyrights, licenses, franchises, trademarks, and etc. These are two main categories of non-current assets, PPE and intangibles, or property, plant equipment, or intangibles. Okay? Now, back to the problem number 5. If you notice, the problem does not mention any information about assets, rather details or transaction on liabilities and owner's equity are provided. Hence, in this case, we could use the basic accounting equation. What is basic accounting equation? Asset is equal to liability plus owner's equity, or asset is a combination of total liabilities and total owner's equity. Okay? In liability, problem states that the liability increased to 3 million or as of end of the year. So same amount to be considered in our balance sheet as outstanding balance as of end of the year. Now, in owner's equity, business issued shares capital worth 10 million on the beginning and no other transaction mentioned in the problems related to shares capital. During the year, company generates sales of 15 million, but we need to deduct the expenses amounting to 7 million to get the net profit of 8 million. Then, this will be added to retained earnings. Since company starts operation only this year, there's no beginning retained earning balance. So, the 8 million profit calculated is the retained earning balance as of year end. However, on December 1, company declares dividends of 500,000 to be paid on January 20 next year. Since dividends is declared this year, we need to deduct the whole amount against retained earnings by debiting retained earnings and credit to dividends payable. We have to consider the liability in this case. Okay, so retained earning balance on December 31 will be 7.5 million. Now we have owner's equity balance of 17.5 million. The combined liabilities and owner's equity balance is 20.5 million, which is also the total assets. Okay, now our answer is 20.5 million, the combination of liability plus owner's equity. Okay, for problem number 6, the requirement are what amount should be reported as current assets and what amount should be reported as total assets. So we have two requirements in this case. So the problem states XYZ company provide the following balance on December 31, 2020. Cash overdraft of 200,000, accounts receivable of 450,000, inventory of 500,000, prepaid expenses of 150,000, land held for sale of 2 million, property, plant, equipment of 3 million, accounts payable of 300,000, accrued expenses of 150,000, ordinary shares capital of 4 million, and the shares premium of 225,000, retained earnings of 125,000. Checks amounting to 215,000 were written to vendors and recorded on December 28, 2020, resulting in a cash overdraft of 200,000. The checks were mailed on January 15, 2021, meaning it is prepared during the year of 2020 but delivered to the customer on January 15, 2021. Another information is land classified as held for sales was sold for cash on February 1, 2021. The entity issued the financial statement of March 31, 2021. Okay, then the requirement, of course, as I mentioned, what amount should be reported as current assets and what is the total assets. Okay, since the check is not yet delivered as of December 31, 2020, the cut-off of our financial statements, we should revert the cash balance and reinstate the accounts payable. The adjusting entry should be debit to cash of 250,000 and credit to accounts payable of 250,000. Another one is the land classified as held for sale should be reported as current assets. It should not be classified as part of the PPA since this is classified as held for sale. To calculate total current assets, so we have cash of 50,000. This is adjusted value after adjusting the undelivered check of 250,000 and accounts receivable of 450,000, inventory of 500, and prepaid expenses of 150 and land classified for sale of 2 million. So all in all, we have total current assets of 3,150,000. So to get the total assets, we should add only the property, plant, equipment of 3 million to get or to arrive at 6,150,000. That is the total asset in this problem. The PPE should be net amount if in case accumulated depreciation mentioned in the problem. Okay, I hope you learned something in our problem for today related to assets. We have problem number 5 and 6 and with different scenarios. Please don't forget also to like, subscribe, and share to others our video. Thank you once again and see you in my next vlog. Bye-bye!